I'll give you a general overview of the PE ratio by going through 3 chapters. The first chapter is going to be regarding the calculation, the second chapter is going to be the application, and the last chapter are going to be some of the limitations of the PE ratio. A quick disclaimer, I'm not a financial advisor, you oversee your investment decisions, and I'm not liable for any results. Let's start with the calculations of the PE formula. There are 3 different types of PE ratio calculations. There's the trailing PE, the trailing PE TTM, and the forward PE. Let's walk through each of these formulas step by step. Trailing PE is the price to EPS of a company based on its last yearly report. So the price is going to be the last stock price, and the EPS is equivalent to the earnings per share of the last yearly report. So for example, this video is being recorded midway 2024. So the most recent full data available for this year is from the 2023 balance statement, since all 4 quarters of the 2023 data is provided there. To put this into perspective, the following quarterly dates and years would be applicable for this month. We have March 2023 for the first quarter, June 2023 for the second quarter, September 2023 for the third quarter, and December 2023 for the fourth and last quarter. So the trailing PE can also be depicted as the sum of Q1 through Q4 EPS ratios for the most recent full yearly data, which in this case would be 2023 data. Now let's take a look at the trailing PE TTM formula. Trailing PE TTM is the price to earnings per share of a company for the most recent 4 quarters. For example, this video is being recorded midway 2024. So the most recent 4 quarters are going to be the second quarter of June 2024, the first quarter of March 2024, the fourth quarter of December 2023, and the third quarter of September 2023. Thus, the trailing PE formula of price divided by EPS can also be shown as price divided by the sum of the first and second quarters of 2024 and the fourth and third quarters of 2023. And lastly, welcome to the future with the forward PE. So forward PE is a PE equivalent to the price divided by the future EPS. It is an estimate of where a company will be in a few years. So a direct comparison between the trailing PE and forward PE is to think of the trailing PE as being based on past performance, whereas the forward PE is based on future potential. Now let's go through an example using Apple's balance sheet. Remember, this is not a recommendation to buy, sell, or hold Apple. It is simply an example of how to use Apple's balance sheet to calculate its PE ratio. So grab a pen and paper and walk through the calculations with me to get a hands-on experience. Your numbers will likely be different than mine. Add a comment in the comment section below about why this might be, and add a like while you're at it. However, the approach to calculate the price to earnings ratio is going to be the same. Okay, so we know that we're going to need the full year EPS and the price for the price to earnings ratio. So in order to find the full year EPS, what we're going to look for is Apple Investor Relations. And once the Apple Investor Relations page opens up, we're going to be able to see the most recent balance sheet. So clicking on that link leads us to the most recent quarter, which is going to be fiscal year 24, third quarter results. Those are going to come out. So we scroll down a little more and we can see the financial data. So as we can see here, we have Q2 and Q1 of 2024, then we have Q4 through Q1 of 2023, and so on and so forth. But we're going to scroll down to the annual reports on the Form 10-K. This is where we're going to be able to find Apple's earnings per share for the previous year. So once we open this document up, we're going to scroll down to where that data is going to be available. So once we go down a little more, we're going to see right here that we're at Apple consolidated statements of operations. So on here we can see net sales, cost of sales, operating expenses, and most importantly, earnings per share. Here we have the basic earnings per share and the diluted earnings per share. So for this calculation, we're going to need the diluted earnings per share, which is going to be 6.13. We're also going to need the price of Apple. So Apple's most recent price is going to be, it's currently at $226.41. However, for the calculation, I'm going to be using the previous close value, which is $223.96. And those are the two values that we're going to need in order to calculate the PE ratio. So the price is going to be the previous close, and the EPS is going to be the most recent yearly EPS. Our trailing PE formula is thus $223.96 divided by $6.13 for a trailing PE of 36.52. Now let's move on to the trailing PE TTM calculation. Now we're going to be calculating Apple's PE ratio based on the most recent 4 quarterly data, or trailing 12 months. In order to do so, we're going to search for Apple Investor Relations. And once we open that page once again, we're going to see here the quarterly earnings report. So we have Q2 and Q1 of 2024 and Q4 and Q3 of 2023. Those are the most recent 4 quarters. So once we open those up, we're going to go to financial statements for 2024 Q2, 2024 Q1, 2023 Q4, and 2023 Q3. Opening those up, we can see that we have, again, net sales, cost of sales, operating expenses, and most importantly, earnings per share. So the basic earnings per share for that quarter was 1.53, and the diluted earnings per share for that quarter was also 1.53. So this is the value that we're going to be using alongside the earnings per share of the other 4 quarters. So here we can see that the earnings per share diluted was $2.18. Next one is going to be earnings per share diluted 1.46. And lastly, we have the earnings per share diluted of 1.26. And in order to calculate Apple's most recent price, we're going to search Apple stock price, and it's currently selling at $226.36. However, I'm going to use the previous close, which was $223.96. Now, those are the values that we're going to need. So we're going to add Q2 plus Q1 of 2024 to Q4 and Q3 of last year, and divide that by the current previous close price. So the trailing PE TTM is going to be $223.96 plus the sum of the last 4 quarters, which is $1.53 plus $2.19 plus $1.26 plus $1.46, which leaves us with a TTM value of $34.77. Now let's move on to the forward PE. Now another PE that we're going to calculate is the forward PE. So in order to do so, we're going to search Apple forward earnings, and we're going to search it from Goldman Sachs. So here we see the article, Goldman Sachs expects Apple to post a beat on earnings. We click on that. When we open up this document, we scroll down, we can see Goldman Sachs analysts anticipate Apple will surpass earnings expectations for the 3rd quarter of fiscal 2024. However, for the forward PE, we usually calculate it based on future years. So once we scroll down this article to right here, we can see that Goldman Sachs sees a path for Apple to achieve $9 to $10 EPS in fiscal 2026-2027. So that is going to be the forward EPS ratio that we're going to be using in our formula. So given that it's between $9 and $10, then I'll be using $9.5. And we also need the price of Apple at this time. So we go to Apple stock price, and we can see it's currently trading at 226.24, but I'll be using the previous close, which was $223.96. And those are the two values we're going to need in order to calculate the PE ratio. Now, let's go back. So the forward PE is going to be $223.96 divided by $9.5, which is equivalent to $23.57. All of these PE values have different values, so which of these is the right one to use? Pause the video, add your comment about which you think is best, and come back so we can transition to the limitations the PE ratio has. There are likely more limitations to the price to earnings ratio, however, I will go over the three that stood out to me. The first limitation is that there are multiple PE formula variations. Some may make a company seem overvalued, whereas another might make the company seen as undervalued, leading to inconsistent results based on interpretation. Second, it is difficult if not impossible to forecast how well a company will do in the future, given how much changes over time. This makes forward PE be susceptible to error with drastically changing conditions. The third is a company's ability to manipulate earnings, thus earnings per share, and thus the price to earnings. To learn about these manipulation techniques, subscribe to my channel and check out my earnings per share video that I added at the end of this video. Thanks for sticking with me throughout the video. If you want to learn about the EPS, click on my previous video here. If you're more interested in taking the next step and learning about how the PE ratio is integrated in the PEG ratio, click on the video over here. Make sure to drop a like and subscribe for more videos coming up soon. Happy investing and see you in my next video.